Good. So we are required to do something in question number 1C of April 2024, Advanced Management Accounting. So you are told that Aerosky Holdings Limited manufactures and sells Sky drones and their accessories. The Aerosky Holdings Limited branded or operates two divisions, that is Camera Division and Sky Division. Camera Division manufactures a component branded HD camera that is used by Sky Division, and Sky Division is a manual, assembly, and final product division or final product division that assembles various components to make a product branded mid-level drones. Both divisions produce one type of output only. So here we are talking about a company that has been divided into, that has been placed or segmented into divisions. So we have two divisions for this particular company. We have two divisions for this particular company, that is Camera Division and Sky Division. So here you'll be able to see, remember this concept is supposed to be covered in topic number 4, transfer pricing, transfer pricing. So just get that question. Just get that question, transfer pricing. You can take a screenshot of the question so that I share my board with you. You can take a screenshot of the question. You can take a screenshot of the question. The question we are doing is April 2024, question number 1C. April 2024, question number 1C. April 2024, question number 1C. So they are covering two concepts in this particular question. We are covering two concepts in this particular question. So the products are as follows. We have market price per HD camera. That is the selling price. We have market price per drone. So whatever Sky Division will be getting as revenue is given here. We have selling price per unit and of course, multiplied by the quantity sold. Then we have assembly cost per hour, production cost per HD camera. Remember, this production cost entails variable and fixed. So you have to identify and tell us which portion is variable and which portion is fixed. Then assembly cost per hour is given here. So it means we need total labor hours for us to be able to get the total assembly cost. Now, are we given total labor hours now that we have labor cost per hour? It is not given unless we have something under additional information. The total outsourcing cost for other components is given here for Sky Division. Then fixed manufacturing overheads for both Camera Division and Sky Division has been provided down here. Now we have demand for this particular HD camera. So if we are talking about the interdependent divisions for this particular company, one division is producing a finished product, which becomes the raw material of the other division. So the other division, of course, has got that liberty of either purchasing from internal supplier, which is the other division or Camera Division, or get it from external supplier. Again, Camera Division has got an option of either selling its HD camera to the internal division, which is Sky Division, or do it to the external market. Look at what we are being told here. External demand for HD cameras, which is being produced by Camera Division, is 10,000. Production capacity. Camera Division has got a capacity of producing HD camera to the maximum of 22,000. Additional information. The production cost per HD camera is 60% variable. So the remaining 40% of the production cost is fixed. So we have to get that. Camera Division sets a transfer price at 70% of marginal cost. 70% of marginal cost. So how do we get marginal cost? All the variable costs incurred to produce this particular item. The fixed manufacturing overheads are absorbed based on the budgeted output. The fixed manufacturing overheads are absorbed based on the budgeted output. Assembly cost per hour is basically a manual job which is subjected to 80% learning curve rate. So this concept here will enable us to get the total labor hours. The first drone will take 2 hours to assemble. The learning curve coefficients at 80% level is negative 0.3219. This will apply to all 12,000 drones assembled, which means Sky Division will be having sales in terms of quantity, 12,000. So that will inform what we are going to have as the HD camera required from camera division. Assume that the learning model is in the form of y equal to a raised power b plus 1, of course, because b is in negative form. The tax rate applicable for both divisions is 30%. Required in column form, compute the post-tax net profit generated by camera division, comma, Sky Division and Aero Sky Holdings Limited are as a whole. Good. So I want us to look at this question, and somebody should be having a screenshot of the question or pick it from the link of past papers provided in the group description. So the first thing you're supposed to deal with here, is how to get the total labor hours for the assembling of these drones. Now, we are told that the company is using learning curve concept, whereby y is equal to a x raised power b. It should be raised power b plus 1. So y here is the cumulative labor hours required to produce x units. So A represents time taken to produce the first unit, which we are told under additional information number 4, the last paragraph, the first drone will take 2 hours, right? Here, we are interested in producing how many drones? 12,000 drones. It has been given to us under additional information number 5. This will apply. The learning curve coefficient of 80% level is this figure. This will apply to all the 12 drones manufactured or assembled. So here we have X to be 12,000 drones. What are we looking for? Cumulative labor hours required to assemble the 12 drones. So the value of B, they have said that learning effect of 80% is giving us the value of B as negative 0.3219. So let's go ahead and get the cumulative hours when X, which is 12,000 drones, are actually assembled. So A will be 2. We multiply by X, which is 12,000. We raise it to power negative 0.3219 plus 1. So can someone give us the cumulative labor hours? Cumulative labor hours when we produce or assemble 12 drones. Cumulative labor hours. Cumulative labor hours. Somebody? What will we have here? So first of all, deal with the numerator. I mean this raised power here. Check negative 0.3219 plus 1. You get a positive figure. The positive figure you are getting indicate that we are going to have 12,000 raised to power that, right? Then you multiply by 2. So what are you getting here? Cumulative labor hours. Cumulative labor hours. Cumulative labor hours. Cumulative labor hours. Good. So NJ is getting 1167.14. Somebody else? Someone else to give us, if you have a different figure, or confirm what has been given to us by NJ. What do we have? What do we have there? Okay, so let's do it together. Now, I want us to deal with this first part. Let's deal with the first part. So we have, what are you going to have when you have negative 0.3219 plus 1? What are you getting? Negative 0.3219 plus 1. What are you getting? Negative 0.3219 plus 1. What are you getting? Somebody, 0.6781. Good. So here, it means we'll be talking about 2 times 12,000 raised power 0.6781. Good. So I want you to take 12,000 raised power this. Then you multiply by, so take 12,000 raised power this one here. Whatever you are getting, multiply by 2. And then you confirm to me whether you'll be able to get 1167.14 hours. Then you confirm to me whether you'll be able to get 1167.14 hours. Good. So once you have this, we'll be able to get labor cost, right? Or assembly cost. So assembly cost here, remember they said the assembling cost per hour is 35,500. And of course we have 1167.14 hours. So what is the total assembling cost? Total assembly cost. Total assembly cost. Total assembly cost. 41,433,470. Thank you. 41,433,470. So that's what they were hiding there. That is what they were hiding in that particular question. So let's look at other items. They are telling us that the transfer price, or let's start with additional information. Number 1, the production cost per HD camera is 60% variable. So variable, we are talking about variable production cost. We are told is 60% of the total production cost, which is 10,000. So what is 60% of 10,000? Will be 6,000, right? That is the variable cost per unit. Now, the remaining portion, of course, will be called fixed production cost. 4,000, that is the remaining amount per unit. But now, we have to look at the total production. Total production for this particular company. Total production, this fixed cost per unit. Adjust the board. Oh, sorry for that. Dealing with it right away. About there. Good. So this is fixed production cost per unit. We have to know at full capacity, because this additional information number 3, the fixed manufacturing overheads are absorbed based on the budgeted output. What is the budgeted output? What is the budgeted output? Budgeted output of HD camera. So budgeted output of HD camera. What do we have as the budgeted output for HD camera? Look at additional, okay, below that table, the last thing in that table before we get to additional information, external demand, we are told, is 10,000 HD cameras. Production capacity, the maximum the company can produce at any given time, keeping everything constant, is equivalent to 22,000. So it means our fixed production cost at all production levels will be 4,000. We multiply by 22,000 HD cameras. So what is the total fixed production cost? Total fixed production cost for this particular division, that is camera division. What will we have there for camera division? What will we have there for camera division? 88 million. 88 million. Good. Additional information number 2. Camera division sets a transfer price at 70% of the marginal cost. 70% of the marginal cost. Good. So our marginal cost is this one here, the variable cost. Our marginal cost is 6,000. Now, that transfer price to camera division, it will be the revenue. To Sky division, who will be receiving this particular item, that will be expense, purchase price. So let's get transfer price. Transfer price is equal to 70% of variable production cost, which is the marginal cost. So what is 70% of 6,000? 70% of 6,000 ni ngapi? 70% of 6,000. 70% of 6,000. What are we getting? 4,000. 4,200. 4,200 is what we have as the transfer price. Anything that we've not been able to take care of? Good. So all the additional information has been taken care of, except number 7 that you're going to use as the last point of our solution here. So let's go to the specific question. Required. In column form, compute the post-tax net profit generated by camera division, Sky division, and the consolidated profit for the entire company. So let's come here and create the 3 columns. So I hope you've retained this figure now that we have it. You've retained this figure. You've retained the transfer price. You've retained the fixed production cost. And of course, you've retained the variable cost per unit. I believe you've retained those workings somewhere. You've managed to retain them somewhere. So let's come to this part here. Let's come to this section for the entire company. We have the first division, the second, and of course we have details here. So we are talking about details. We are talking about camera division. We are talking about Sky division. And we are talking about the entire company, which is called Sky Holdings Limited. Holdings, Sky Holdings Limited. Sky Holdings Limited. So let's start with the first item. Remember, we are having sales. So we have internal sales. We have internal sales. And then we have external sales. So that will enable us to get total revenue. So internal sales, that is camera division selling to Sky division. So camera division has stated very well that the market price per HD camera is 19,000. And remember, they are selling 12,000 HD camera. One HD camera will be equivalent to 1 drone, right? So this company, that is, this division, Sky division, is supposed to assemble 12,000 drones, which means they require 12,000 HD cameras, right? They require 12,000 HD cameras. So camera division has to sell to them 12,000 HD cameras. At what price? 12,000 at 19,000 per HD camera. So what are we having as the internal sales to camera division? camera division has been able to make sales of 12,000 to Sky division. So what do we have? 228 million. 228 million. 228 million. Good. How about external sales? Remember, we are told camera division has got a capacity of 22,000. They have been able to sell 12,000 to Sky division. They are remaining with a balance of 10,000. At what price? Still at 19,000 per unit. So external sales, we have it here, camera division doing external sales of 190 million. That is camera division doing the sales. So let's come to Sky division. How many items did they sell? They were able to produce 12,000 drones, right? 12,000 drones. So the 12,000 drones were sold at what price? Look at the market price per drone, 160,000. So when you take 160,000 by 12,000, what is the total revenue received by Sky division? Remember, they are not doing internal sales. They are only doing external sales for their case. So what do we have? Total revenue for Sky division. We take 12,000 by 160,000. What are you getting? 1920 million. So 1920 million. That is what we have as external sales by Sky division. Good. So let's come and get costs, the costs that were incurred. So the cost incurred as per that table, the first item we're able to see is production cost per HD camera. And this production cost, so we can talk about total revenue. Total revenue, you add the revenues. You add the revenues. So you can add this one here and give me the figure. You can add this one here and give me the figure. Are you getting 418 million? Thank you. So that's what we have as the total revenue. So let's look at less total costs or less costs that were incurred. So we have variable production costs. So the variable production cost here, we were able to see our variable production cost is equal to 60% of the production cost, which gave us 6,000, right? We were able to get 6,000. And this 6,000 we multiply by the units that were produced. So what do we have here? Remember, that is for camera division. They produced 22,000 HD camera. So when you take 22,000 by 6,000, what are you getting? 22,000 by 6,000. What are we getting? 22,000 by 6,000. What are we getting? What are we getting there? 132 million. So that is variable production cost. Good. Then we have fixed production cost. So what is our fixed production cost? We got a fixed figure somewhere. We were taking, it was 4,000 per unit, and of course multiplying by full production or at full capacity. 4,000 by 22,000. Were we getting 88 million? Were we getting 88 million somewhere? Were we getting 88 million? Somebody to confirm what NJ is giving us? Was that the figure we were getting? Underworkings? Underworkings, were we getting that figure which is given to us by NJ? Are we getting the same figure? Great. So we have 88. That is fixed, 88. That is production costs. Then we should not forget something. Before I move to anything, we should not forget something here, right? Sky Division is making sales of what they are manufacturing, but they have been able to purchase raw material. They have been able to purchase raw material. So how are we going to get the raw material purchased? How are we going to get the raw material purchased? Somebody to help us there. How are we going to get the raw material purchased? Raw material purchased. Remember, the transfer price which we are able to calculate, we talked about. Oh, there's a mistake. There's a mistake. There's a mistake. There's a mistake here. There's a mistake here. When we are doing internal sales, remember they were making sales to Sky Division. That selling price being charged to the Sky Division is called transfer price. So, are you able to remember our transfer price? Are you able to remember our transfer price? Are you able to remember our transfer price? Our transfer price was equivalent to 4,200. So they are going to make internal sales to Sky Division at the transfer price, not at the market price. So this transfer price, we multiply by the units that were sold to Sky Division, which is 12,000. So when you take 4,200 by 12,000, what are you getting? What are you getting? 50 million, 400,000. So you're supposed to have 50 million, 400,000. Remember, to camera division, that is an income, right? To camera division, it is an income. To Sky Division, they are going to pay to be able to acquire the HD cameras. So to Sky Division, those are expenses. We call them purchases or transfer charges, right? So the same 50,400,000, which is an income to camera division, it will be an expense to Sky Division. It will be an expense to Sky Division, right? It will be an expense to Sky Division. Any other cost in card? Any other cost in card? Any other cost in card? Let's look at it. So from the production cost per HD camera, we have assembly cost per hour. So we have assembly cost that relates to Sky Division. Were we given assembly cost, I mean total hours? No, we were able to calculate it and we got a figure. Remember, we were getting 1167.14 hours and we multiplied by the rate per hour, 35,500. We were getting something. Can you give me that figure so that we post it here? Can you give me that figure so that we post it here? 41,433. 470. 41,433, 470. Great. Now, the next thing below assembly cost there, we have total outsourcing cost of other components. Outsourcing costs. Outsourcing costs for other components. You don't have any for camera division, but for Sky Division, we have 1686, 670,000. 670,000. Then we have fixed non-manufacturing overhead. So we have fixed non-manufacturing or non-production overheads. So these ones here, applies to both camera and sky division. So we have 10, 560,000. Then we have 33 million. 33 million. So let's go ahead and get what we call profit. Let's go ahead and get what we call profit before tax. So profit before tax. Profit before tax, what are we getting? You will take your total revenue less all expenses. So can you give me the figure here? Can you give me the figure here? Profit before tax. Profit before tax for camera division. Profit before tax for camera division tunapata ngapi? Let me see. Profit before tax. So this one should be 240. 400,000. Then we deduct. All these expenses. So I'm getting 9840. Thank you. 9840. That's our profit before tax. How about this side? How about this side? We have 1920. 20,000. We less 5,400. We less 41. 433. 47. We less 1686. 670. We less 33 million. So what are we getting here? What are we getting here? Somebody should be able to give us the figure there. Somebody should be able to give us the figure there. Is it close to this figure? Now that everybody is quiet, is it close to this figure? Yes, thank you. Now, they said we prepare for camera division, sky division, and of course for the entire company. So I want us to get tax. I want us to calculate tax expense. Our tax expense here should be 30% of the profit before tax. Should be 30% of the profit before tax. So here I'm getting 32,548.9, sorry, 959. Good. So that one we need to less 496, giving us profit after tax of 75,947, 571. So that's our profit after tax. How about this side? Profit after tax. So our tax will be 30% of 9840, which will be 2952. So we divide that, or we get the difference, which will give us 6888. So that is what we have, 2952. Good. These are profits after tax. Just come and add the figures, column, I mean row wise, just add the entire row. So here we have 50, 400, 50, 400. Then we have 1920, we add to 190 million, which would be giving us 21. Then when you add everything to that, we add 50, 400, 400,000 will give us 21, 60, 400. Good. So we come and add them across. Come and add them across. Come and add them across. We come and add them across. Then we add everything. And of course, we have 33. That will be 43. Right? So just come and add these two. You'll be able to get the same thing. You'll be able to get the same thing. Then we add the taxes together. We add the taxes together. We add the taxes together. So remember, we are deducting tax, right? Just not tax is supposed to be deducted. So you can put in bracket or indicate less tax expense. So once that is done, I believe we should be able to get the same answer. So we are getting 82, 835, 571. That's what we are having as the profit after tax. And of course, we have now answered the question that you are requested to deal with by the examiner. We are required to do, first of all, we have to identify this using the learning curve concept. We add to again get total fixed cost, fixed production cost here using absorption costing method. And of course, we add to again use the transfer price method, which is in topic number 5 for this unit, to be able to get the transfer price for the internal sales. So here it is revenue for camera division. The same figure becomes an expense, to the Sky division, because they are going to incur that to purchase the HD camera, in addition to the other costs that will enable them to bring in this drone to life. So that's what we have, and of course for the entire company. So that's what you are required to do. Are we together up to that point? 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 Have you learned something? Are you better than the way you joined this meeting? If you are told, what have you done for these 50 hours that you've been, 50 minutes that you've been in this class? Will you say that at least you've learned something new? Will you confirm that? Great. So remember, you are getting these free classes from RCM Online College, which is now a fully accredited institution by CASNEB. It is now a fully accredited institution. So for you to join this class, for you to join our MA class, for you to join our Advanced Management Accounting class, which currently is a compulsory unit for everyone. What is the meaning of accreditation? Okay, that basically means they are now given powers. Remember, for you to do business, for example, you must get license, right? You must have business name, you must have license to do business in that particular area. So RCM is now fully accredited or given that power to administer, to train students who are sitting for CASNEB exams, right? That is CPA, CS, CIFA, CAMS, and ATD, right? So that's what we have, or that's what we mean by the word accreditation. So for you to join our AMA class, just do your payment to this pay bill and of course account name AMA. You are allowed, if it is your first time to do this unit, you'll be required to pay 4,800, right? If you are doing this for the second time, it is a retake, you will be required to pay 4,000 if you are learning for the first time at RCM. And of course, for the RCM students, it is now a bonus given to you again. Beyond that point, you'll be required to pay only 3,800 for this particular unit for the entire semester. With all these options, you are allowed to pay at least half, start your learning, and clear the balance within 30 days or after 30 days. So that's the benefit. You should not just go and get 4,800 to join the class. No, get your 2,400, join the class and clear the balance 30 days from today. Get your 2,000, join the class and clear the balance after 30 days. And of course, join the class or pay 1,900 and join the class as you wait to clear the balance after 30 days. So this is what we have. So just do the payment to this number, and of course, you'll be able to join this particular class. Not only for management or advanced management accounting, all the CPA units, all the ATD units, just do the payment to this particular pay bill and you'll be able to access all the items that have been covered since we started this particular semester. For additional information, for more inquiry, for more information, you can reach out to 07 19 525 or 07 93 555 000. So these two people here will guide you on how to move forward once you're able to do the payment. Once you're able to do the payment for this particular unit. So I believe that is enough for today. We have to end our session. Thanks for your time and have a blessed time, you too. See you next time.